Welcome to the Wealth Wisdom, where knowledge becomes power and power builds your future.
You've been told that taking a loan is a personal decision, a private agreement between you and a bank, a financial step you take to buy a home, start a business, get an education, or simply survive. But what if that decision, your loan, your debt, isn't just about you? What if your debt quietly fuels something much bigger, something hidden in plain sight, something governments across the world rely on, far more than you realize? Because here is the truth almost nobody speaks out loud. Your loan is not just your burden. It's someone else's asset, someone else's plan, someone else's advantage. And when you begin to see how governments benefit every time you sign a loan agreement, you'll start to understand why debt has become the engine of modern society and why escaping it feels almost impossible. This is not a story about banks alone. This is a story about a system that evolved over centuries. A system built on promises, numbers, and trust. A system that needs you in debt, not accidentally, but by design. And once you understand the cause and effect mechanism behind it, the world around you, mortgage policies, student loan programs, credit cards, national budgets will suddenly make sense in a way you never expected. But before we get to the hidden mechanism that ties your personal loans to government power, we need to rewind back to the beginning, back to when governments didn't rely on debt and how everything changed when they discovered a new kind of financial magic. It starts long before banks looked the way they do now, long before central banks controlled interest rates. Long before the idea of borrow now, pay later became a normal part of everyday life. Because in the earliest societies, governments had only two ways to fund their operations: taxes and treasure. They collected money from citizens, or they conquered and took wealth from others. There was no borrowing in the modern sense. No loans. No central banks acting as national safety nets. But then came wars, expensive wars. Wars that lasted longer than the treasury could handle. And governments needed something new, something powerful, something that could generate money when taxes and treasure weren't enough. They needed debt, but not personal debt yet. That would come later. First, they needed government debt, the ability to borrow from wealthy merchants, aristocrats, and eventually entire populations. And with that borrowing came the birth of an idea that would reshape the world: the government bond. A loan to a nation. The concept was simple. The government would borrow money, promise repayment with interest, and use that money to wage wars, build infrastructure, expand empires, and secure power. But this idea created a hidden consequence that would later spill into the lives of ordinary people. Once governments learned to borrow, they never wanted to stop. Debt became a habit, then a dependency, then a necessity. And as nations grew, so did the scale of their borrowing. But there was a problem, a huge one. Governments realized that relying only on wealthy lenders was risky, too risky. They needed a broader base. They needed a constant flow of credit. They needed a predictable pool of borrowers whose debt would keep money circulating, not just for banks, but for the government itself. And that's where ordinary people entered the picture. The rise of personal debt wasn't an accident, it was a solution, a tool, a foundation upon which the modern financial world would be built. Because the moment citizens started borrowing on a massive scale from mortgages to consumer loans, the government gained access to something it had always struggled to maintain, an endless, ever-growing source of economic energy. But how does your loan benefit the government? How does your debt fuel the financial system? Why would powerful institutions want you borrowing instead of saving? To answer that, we must move through history chronologically, step by step, cause and effect. Because everything begins to make sense once you see the chain reaction. When personal loans became widespread in the 20th century, they brought an explosion of spending. Homes, cars, appliances, education, businesses, and every dollar borrowed became a dollar spent, taxed, circulated, and counted in the economy. Governments quickly realized something profound. Borrowing creates economic growth. Saving slows it down. When people borrow, the GDP rises, businesses make money, wages increase, jobs grow, taxes flow, political stability strengthens. When people stop borrowing, everything begins to stagnate, and stagnation is political death. This is the first way your loans secretly benefit governments. They keep the economy alive. Not metaphorically, literally. Debt creates the illusion of prosperity during times when actual economic productivity isn't enough to fuel growth on its own. Governments began encouraging it, subtly at first, then openly. Tax incentives for mortgages, low down payments, student loan programs, government-guaranteed loans, credit systems with easy approval, low interest rate periods engineered by central banks. The system wanted one thing: borrowers, because borrowers spend more than savers. Borrowers stimulate more than savers. Borrowers keep economies active when productivity and wages fall behind. The more you borrow, the stronger the economy looks, at least on paper. But this is only the first layer of the story. The benefits for governments go much deeper. You see, every loan you take instantly becomes a financial asset, a promise to pay. And that promise is not just between you and a bank, it becomes part of a larger web of financial instruments. Banks use your loans as collateral to borrow from central banks. Central banks use those loans to justify printing new money. Governments rely on that money to fund their budgets. The economy depends on that circulating credit to keep functioning. Your debt fuels the system. Your loan becomes the foundation for new money. And new money becomes the lifeline for governments drowning in their own debt. Now here's where the story gets its first twist. Governments discovered something extraordinary. They could benefit from your debt in more ways than one. Because when you borrow money and pay interest, the government gains twice. First, they tax the bank's profits from your interest payments. Second, they benefit from inflation created by credit expansion. Inflation, the invisible force most people misunderstand. You've felt inflation. You've seen it in rising prices. You've heard it, blamed on everything from supply chains to pandemics to war. But the most consistent driver of inflation is debt. When people borrow, money enters the economy faster than goods are produced. Prices rise, and when prices rise, something interesting happens. The government's own debt becomes easier to pay back. Inflation shrinks the burden of government. Debt. Inflation shrinks the value of what the government owes. Inflation helps governments erase debt without repaying it fully. And who pays for this benefit? You do, because while your loan interest is fixed, inflation keeps rising. Your salary doesn't keep up. Your savings lose value. But the government's debt becomes lighter. This is the second secret way governments benefit from your loans. Inflation created by borrowing helps governments escape their own debt. Now we reach the breaking point in our story. The moment everything shifted from strategic borrowing to unavoidable dependency, countries around the world accumulated so much debt that economic survival became tied to one constant: the continuous flow of personal loans. Governments now rely on your debt for tax revenue. They rely on your debt to grow the economy. They rely on your debt to keep inflation steady. They rely on your debt to reduce their own fiscal burden. The system has become so intertwined that if people suddenly stopped borrowing, the global economy would collapse. Think about that. A world so addicted to debt that your personal loan is not just your financial choice. It is part of the machinery holding the global system together. And this leads us directly to the fallout. The consequence. The modern reality we are living in right now. Governments, central banks, and financial institutions cannot allow mass deleveraging, people paying off loans and refusing to borrow again. If borrowing slows too much, tax revenue drops, business growth slows, wages stagnate, jobs disappear, economic panic sets in, political instability rises, governments fall. So what do governments do? They push borrowing harder, low interest rates, stimulus packages, government-backed loans, housing incentives, easy credit approvals, student loan expansions, consumer financing programs. Every major economic policy of the last 30 years has been designed to encourage more borrowing, not less. And yet, the public is told that borrowing is purely a personal choice, a financial decision based on one's needs. But behind the scenes, borrowing is systematically engineered, incentivized, and normalized. When wages fail to keep up with cost of living, what fills the gap? Loans. When housing prices rise faster than people can save, what fills the gap? Loans. When education becomes too expensive to afford, what fills the gap? Loans. When governments need the economy to grow but productivity stalls, what fills the gap? Loans. Debt has become the duct tape of the global system, covering cracks, filling holes, preventing collapse. But all duct tape has an expiration date. Now we enter the modern parallels, the repeating patterns, the shocking data that most people never see. Around the world, total household debt has reached historic highs, over $300 trillion globally. That number is larger than the entire global economy multiplied several times over. Student debt is the highest it has ever been. Credit card debt just hit a new record. Mortgage loans are bigger and longer than any time in history. Government debt is so large it can never be repaid. Yet borrowing continues. It must continue. The system cannot survive without it. And here's the part few people understand. Governments benefit most when citizens owe money. Because indebted citizens are predictable citizens. People with loans pay taxes more consistently, take fewer risks, accept more government policies, contribute more to GDP, consume more goods and services, have less savings and therefore less autonomy. Debt isn't just financial, it's psychological. It shapes behavior. It shapes society. It shapes power. A highly indebted population becomes easier to manage, easier to influence, and easier to keep inside the economic machine. And a government that benefits from your debt is unlikely to ever tell you how the system really works. But now let's bring this story full circle. Let's step out of history and into the present. Let's tie together the origins, the rise, the breaking point, and the modern consequences into 3 clear truths you need to understand. Truth number 1, your debt is not just your burden, it is part of the government's financial model. Your loans help create economic growth, tax revenue, and inflation that benefits national budgets more than individual lives. Truth number 2, the system is designed to keep you borrowing. Rising costs, stagnant wages, aggressive credit systems, and national policies all push you toward loans because the economy cannot survive without constant debt creation. Truth number 3, the greatest risk today is believing the system is built for your benefit. It isn't. It's built for stability, for control, for sustaining a financial structure that requires your participation, your payments, your debt. So here is the warning. The world is approaching a moment where debt levels are becoming unsustainable, not just for individuals, for nations. And when that moment arrives, the rules will change. They always do. Economic resets, currency shifts, policy overhauls, and in every historical precedent, the people holding the most debt and the least assets lose the most. But there is hope. Understanding the system gives you power. Awareness gives you leverage. Knowledge gives you choices. And if this video opened your eyes, even slightly, then hit that like button so more people can discover what's really happening behind the scenes. Subscribe to join a community that refuses to sleepwalk through the financial world. And share this video with someone who needs to understand that their debt is not an accident. It is part of a much bigger design. The system may depend on your loans, but your future doesn't have to.